Hey folks, it's Vic Noble here with your weekly trade example for the week ending July the 6th, 2012. And today I'm going to talk to you a little bit about trading counter trend and how to trade counter trend. Now, when I say counter trend, it's kind of a matter of perspective because what looks a downtrend on one time frame might be an uptrend on another time frame. So how do you figure all that out? So this is a daily chart of the U.S. Canadian dollar pair for today. This is again July the 6th, Friday. And you can see we had this nice move up and then this. Now you could look at this and go, well, look at this candle action is like really negative here. This is a downtrend. This is going down right now, right? But on the weekly chart, and this is really, no, even if you're day trading, keep an eye on all these time frames. They all matter. The weekly chart's heading up. That's a pretty strong uptrend. And here's a pullback and an uptrend. So how do you reconcile all this? Well, I want you to watch this number right here, the 101 figure area, which is always an important place to watch. And if we go back to the daily chart, you see all these lines I have on here. These are support resistance levels, key levels that I mark off on my charts that we show everybody in the Coach's Corner how to do this. It's very simple to do. There's a really easy way to do this, by the way, that we go over. And this level right here was a really, really important level to watch. Why? Because it was old support. Look at this back here. See how it was support here for so long? And then it finally broke below it. And when it came back to it, it plowed right through it, didn't it? In fact, it plowed through it, came back and touched it on this candle right here, and straight up, and it's come back to retest it again. Now, how do we know we want to trade here or not? First of all, it hits it, and look at this candle reaction. We talked about candles a lot of times in the weekly trade examples. That's bullish. If we look at the Fibonacci numbers on this, which is just kind of another confirmation, if you look at this, we've come back. Look at this right here, 50% retracement level as well. So that's another good clue that we're at possible support. Possible support, I said. Now, we're going to be looking at a counter trend trade here. So how do we trade it? Well, that's why it's so important to have a trading plan. Today, and this is exactly what we show in the Recurring Forex Patterns course. And you know, when you look at the daily chart, or probably the 1 hour chart on this pair, here was non-farm payroll release right here. Is that bullish or bearish? That's super bullish. The US dollar had a big rally after the non-farms came out. And this sets up pattern number 6 perfectly. Here's the daily high from the prior day, which is right here. Here was the low. And look, price broke out above it. We're making higher highs, higher lows. That's bullish. We're day trading here. That's bullish. Okay. Look at the dollar index, for example. I'll just show you on this chart here. Here was the release of the non-farm payrolls. Did the same thing. So the US dollar is having a strength day. Now the other thing that we really watch on these trades is the environmental conditions of the market. And they have a big impact on how you want to position your trade. They really help. I mean, price always shows you the way. But knowing the environment and how to read it, it really can help your trading a lot as far as knowing when to hold your trades longer for bigger profit potential and all that kind of thing. This set up an absolutely ideal number 6 trade pattern number 6 on our RFP course for a buy around the 101.65 level. In fact, I got an email from Shirley. She took this trade herself and got into this trade. And for riding it up, where do you take your profits on these things? Well, there's several places, but you know, when you get the momentum going, this is a momentum trade. Momentum trades really do well. And even though we just saw that it was actually a counter trend trade to what the daily chart was doing, didn't we? But intraday, we have a momentum trade going, and everything is fitting it. The candle action is telling us that, the environment's telling us that, the levels are telling us that, the pattern setup is telling us that. And for your profit target, here, go to your 4 hour chart now. What's going on here? You want to look for where can you expect there to be resistance. Anywhere, like see, this used to be resistance, price broke below it, and we've come all the way up back to it. Now don't forget, these are kind of zones in here. From the wick to the body is a zone. Anywhere in here is resistance. And look at this, from this high down to this low, 38% retracement. This is really common, by the way. When you get this kind of an impulsive move, 38% is a very, very common level. And what else is it? It's the figure 102. See? So that's even more reason why you might expect to bounce. And it's Friday, and it's getting late in the day, and all that kind of thing. So there's a place where you can really expect there to be a good place to take profits, which is exactly where Shirley took hers, is at 102, right at the figure there. So, you know, a nice move there of almost 40 pips, and for a very small risk in this trade. So, you know, that's what I wanted to show you this week, that this is how you trade counter trend. You got to identify support or resistance levels first. Then you look to see some candle action happening, and then look for a pattern that you recognize so you can take these trades on. And like how you want to trade and the patterns you want to use and all that is individual. I mean, there's all sorts of different ways to trade, right? I mean, you might not particularly like that sort of a pattern setup, and that's fine. There's other ways to do it as well. But in fact, yesterday in the coaches corner, we had one of our members, Darren, came on there and gave us a presentation on trading slingshots. Slingshots are something that is unique to the coaches corner, and I mean, I won't even tell you about the returns that some people are getting with those. They're off the map. But again, when you step into those things, you don't get that right away. It takes time to learn them, but you learn those things, and I'm telling you, actually, interestingly, this U.S. Canadian dollar pair here was a slingshot buy on a weekly chart right at 101. It all fit, everything lined up here at the same time, and then you get the pattern after it if you want to trade it that way, or there's all sorts of different ways to trade it after that. But the point I'm making is that when you identify key levels and you start to trade with the actual momentum of the market, you give yourself a very, very good chance of consistently making pips on these trades. Okay, so I think I'll leave it at that. And so there you go, counter trend trade at a key level, and counter trend to the daily chart, but actually a trend trade when you look at the higher level weekly chart. And so just remember to keep an eye on all your time frames, because they all help you uncover all the clues as to which way the market might be going, and together with candle action and so on. Alrighty, you guys have a great weekend. It's beautiful and sunny here in Vancouver finally. Man, we just had so much rain and lousy weather, and we're all just ecstatic. You can probably hear it in my voice here. I'm pretty excited to get outside here today and go and enjoy it. But you guys have a great weekend wherever you are, and a great week ahead, and I'll see you at the end of next week with another weekly trade example. Thanks so much.